Hello friends, a very warm welcome to my channel. In this video, we are going to talk about a company in a very different sector which we usually don't analyze so much. It is the healthcare sector and the company's name is Narayana Hrudayalaya. So this is one of the stocks which has given very good returns in the recent past, and again it fits into our framework of sales growth, margin expansion as well as PE re-rating, and we'll talk about it more in the coming slides. If you're new to the channel, please do subscribe and hit the bell icon, and if you're not a part of a Telegram channel yet, do join today by searching my name on the Telegram, as every day morning I share my view on the market which will help you manage your portfolios much better. So let's talk about Narayana Hrudayalaya. This will be the flow of our presentation. We'll start with understanding the business model in brief. We'll look at the chart, how has the stock performed in the recent years. We'll talk about the main metrics of the financial performance. We'll look at the reasons why the stock has given very good returns. We'll talk about the outlook of the company in the near future. We'll see the valuations of the stock at present levels. We'll look at what is the risk of investing in this company and form a view after understanding all these factors. So this is an overview of their business. As you know, this company is in the healthcare sector. They run hospitals on their own, and few of the hospitals are managed by them and are owned by others. They also run clinics and dialysis centers. So if you look at the region-wise spread, in south they have about 6 hospitals, in east about 7, in north they have about 4 hospitals, and west about 2. And they also have international presence. If you talk about their heart centers, they have 3 in the south and 11 clinics in the south, and they have these heart centers and clinics also spread across the other geographies. In terms of number of beds, if you look at their presence, in south they have about 2150 beds, in east they have about 1871 beds. So their major presence is in the south and the east, and in north they have about 1156 beds and west about 351. So in terms of presence, west is a region where they have still lesser presence compared to the other regions. The total number of hospitals which they own, operate themselves are about 18 hospitals, which account for almost 5346 beds, and there is only one hospital which they don't own but they manage on behalf of others. They have 3 heart centers totaling of about 187 beds, and in terms of clinics and dialysis centers they have 17 centers. They also have presence in Cayman Islands, which is one hospital comprising of somewhere around 110 beds, which they are going to extend this further. So the company as a whole, they have somewhere around 6100 beds in total. More than 4000 doctors are associated with them, and they have more than 18,000 people working with them. So when you look at their scale of operations, you get to know that this company is doing really well in the healthcare space. The similar thing you will find in their chart. The stock has given very good returns consistently over a period of time, and even now it is trading at an all-time high. So in this sector, what happens whenever there is fuller utilization of Capex and the new facilities are getting constructed, sometimes the stock enters into a consolidation phase for a long period of time. When you look at their financial metrics, their revenue has shown good growth consistently in the last 5 years. There was a small dip in FY21 compared to FY20. They did a revenue of about 2,500 crores in FY21, and from there the revenue has almost doubled to about 4,800 crores in the trailing 12 months. When you look at the EBITDA, you will see that there is a small dip in FY21, but thereafter the EBITDA has grown faster than the revenue, and it has reached almost 1,100 crores in comparison to just 189 crores in FY21. When you look at the margins, you will know the reason for the faster growth in EBITDA. The margins have expanded. They did about 14% EBITDA in FY20, which went down to almost 7% in FY21, which further expanded to almost 23% in FY23. So as we talked about in the beginning of the video, the stock has done well because there was consistency in the sales growth. At the same time, there was margin expansion leading to faster growth in profits. Now these are some metrics which we specially track in the hospitals or healthcare sector. The average revenue per patient, which is ARPP, has grown from about 1,10,000 to almost 1,18,000 in the recent quarter. So there is a improvement in this metric also. Now what is the reason for the spectacular returns in the stock? There has been consistency in the revenue growth in the last 10 years. If you observe, the revenue has been in an uptrend consistently. The company has worked on more efficiencies in their working. They have introduced latest technologies which has improved the margins of the company over a period of time. They have been continuously doing Capex to maintain their growth, and they have also introduced specializations in their hospitals which will lead to higher revenue. Now going forward, what is the growth outlook? The company is continuing Capex, but in the next few months or a year or two, there will not be significant addition in the beds because it will take time for the new hospitals to get constructed. In the existing hospitals, there will be some efficiencies which they will add to, and there will be some improvements in the number of beds which will not be so substantial, and without much investment in the present hospitals, the company says that they can grow the revenue at higher single digits. But the management is confident that they will be able to maintain these margins, and over a period of time they can work on further improving these margins a little. So these are the capex plans of this company going forward. These are in millions. So they will be doing about 590 crores of capex in greenfield and inorganic expansions. In brownfield, they will be doing about 257 crores, and 139 crores they will be doing in the replacement and maintenance. What they believe is that they have to continuously improve the quality of their infrastructure and also spend maintenance capex to maintain the quality of service in the hospitals. When you look at the valuations have also shown a steady increase. So sales growth, margin expansion, and valuations re-rating. On an average, this stock used to get about 3 or 3.5 times of revenue earlier, and now it has gone up to almost 5 times. So there has been a re-rating in the stock that is leading to higher returns. In terms of earnings multiple, it is getting somewhere around 34, which is not that expensive but slightly on the higher side. The PE is not appearing so expensive because of the margin expansion along with the revenue. Now, what are the risks of investing in this business? This industry is highly regulated by the government, so that is always a risk. If there is a increase in inflation, which there are lesser chances now because we have reached the peak interest rates and the prices are now stabilizing or on a declining trend. If there is an inflation, the hospital suspects that there will be compression in the margins. There can be competition because this sector is getting more and more competitive with new players coming in and existing players going ahead with larger capex. And sustainability of margins has to be closely watched because the margins have seen a substantial increase in the recent years. So sustainability of these margins is very important for us as investors. Now, what is the view on the stock after understanding the business, the growth plans, the risk, and the stock performance? The existing investors can continue to hold because the management still continues to deliver very good results even in this quarter which has passed by. New investors who want to enter this stock can wait for a while as the chart looks a little stretched and the valuations are looking slightly pricey now. So that's our view about Narayana Hrudayalaya. If you like the video, hit the like button and subscribe to the channel. If you want me to make videos on your favorite stocks, don't forget to mention the stock names in the comment section. If you're not a part of our Telegram channel, do join today. Thank you for watching and have a wonderful day.